Hello and welcome back to viewbitcoin.com. Welcome back to the podcast. It's your host, Benaiah Willis. As always, we will be discussing the probabilities and statistics of Bitcoin going up or down. By no means is this to be deemed as investment advice. This is simply mid-journal, and I'm simply unveiling my journal and keeping myself accountable in the process. So within this podcast, we'll keep it short and sweet. We'll discuss 6 key topics. First and foremost, we'll go into the monthly. We'll look at the key levels that you see on the chart at the moment. We will then segue into the daily time fractal on BTC, and we'll be discussing the critical territory, which we are currently within. We will then segue into the 4-hour time fractal, which is more of an intraday time frame level. Again, we are within the critical territory, but we are a bit more mature in terms of the inflections on the inertia of the momentum. Sounds a bit gobbledygoopy, but we will make full reference to that momentarily. And then we'll segue into gold, particularly what gold looks like on the daily time frame, where we expect the draw on liquidity. Either will gold go up or will it go down? What's the likelihood of this transpiring? And then we will turn our attention away from Veblen goods driven on supply and demand, i.e. we'll ditch Bitcoin, we'll ditch gold, and we will segue into the dollar, and we will look into the dollar day chart and see how that fits into the narrative, weighing up the pros, the cons on the Libra scale of importance. Then last but not least, we'll just summarize the base case, we'll spoon feed the nuance, and then we'll conclude. Short and sweet. Okay, cool. So that's the agenda. At the end of the video, all those things will be very crystal clear in your head. So without further ado, let's jump straight into it. So looking at the monthly, what do we see here? Well, you will see 2 prevalent rectangles, right? One will be red, one will be green. So it's pretty linear in this respect, right? The green rectangle is our support, better known as supply. Or demand, sorry, I beg of your pardon. Support is demand, absolutely. And then the resistance would be the supply, okay? So it just matters what you want to call it, right? Supply and demand or support and resistance, it's the same essence of the idea, just different terminology. The key idea is this: price action will tend to ping pong between the support and the resistance, or the supply and the demand. So ultimately, what's happened here is we are literally just underneath the resistance, which is just underneath the supply zone. So it does mean technically the air of probability does allude towards the downside, because we've already fleshed up probably 75% worth of the girth. If we're to get a measurement tool from top to bottom, which was from November 2022 all the way to here now, it's gone up 186% since the support. We are about 10% away from the top box, right? A full extension to the top box would be a 200% increase from November last year. Right now we're 186 approx. So in essence, there's about 14% increase. If it really wants to push it, then I do expect a biblical resistance to be respected around that region. Now, yesterday I did put out a tweet on all my social media platforms, and I said this, with this exact chart, accompanying my post. I said in the post, supreme support, meaning the green box, and then I said royal, meaning royal resistance. So royal resistance should be respected. And again, this is just a thesis, right? If we govern above, of course, resistance would be flipped into support. And equally with that said, if we go below the green box, the support would be flipped into resistance. So it is what it is until it is what it is not. But this is what we're here to do. Okay, it's not Mystic Meg, it's not Crystal Ball, it's not roll the dice, it's measure it with quantitative compute and power, and that's the things that we can measure with our 4 postulates, i.e. trend, volume, momentum and volatility. It does help us, really theorize what we're trying to contextualize. Make sense? Cool. So that's really the monthly. Of course, we're above this green line here. This is called the entropy line on the trend volume entropy indicator. When it's red, you want to be selling. When it's green, typically you want to be buying more often than not. And right now we are green for all it's worth. Okay, as long as we're above the open of this month, meaning 37 large, we will remain above the green. If we go below 37 large, this green line will then turn red, and that will be very indicative of velocity waning towards the downside. So cool, that's the monthly box stuff. Don't want to spend too long on that. So next we've got the daily time frame on BTC. Let's bring that up and let's look at that. So looking at the daily, the main thing I want to bring to your attention is the trend volume inertia indicator, which typically amalgamates most traditional oscillators, implying in simpleton terms the RSI, better known as relative strength index, the MACD, better known as moving average convergence divergence, and the stochastic reflexivity. So ultimately, what does all that jargon talk mean? I'll tell you now. This is measured out of 100. Okay, anytime we're above an 80 read, typically we're in the critical zone, critical territory. Now, what would happen normally is a violent rejection from the critical zone, and a what's the word I'm looking for here? A balancing effect, right? The grand equalizing force is balance. Right, this is really what I wanted to say. The grand equalizing force is balance. What goes up must come down. You've heard the narrative many times before, and when it comes to momentum oscillators, they work exactly the same. When they're really in their extreme critical zone, typically you'd expect them to cool off. It's like thermodynamics. If something's really hot, it will likely cool off. If something's really cold, it will likely heat up. And in terms of this inertia, we measure that quantitatively, right? So we can say to ourselves categorically, the relative strength index is falling on Bitcoin as long as it's underneath, let me words out here. I should have had a coffee before doing this, Jesus Christ. The RSI will be falling underneath $43,775. That's imperial. That's not an opinion. That's an observation made by computing power and formula, not feelings. So again, that number is $43,775. As long as Bitcoin's failing, which it is failing to reclaim back above, currently it's 43.2. We're like $500 underneath. I suspect that momentum will continue to fall towards the downside. Simple as that, really, right? What's in motion stays in motion until it stops, and that's one of Newton's laws of physics, and it's one I often echo. Physics is the law, everything else is a recommendation. The law of woman and man is broken by woman and man, but the law of physics has never been bended or broken by woman or man. So when it comes to this, it's kind of important. Anyways, let's move forward. So looking at this then, we can say categorically RSI is falling. Now the stochastics will also be falling and will turn red. This will turn red today. In the next, one second, let me tell you exactly. In the next 13 hours and 15 minutes, the stochastics will officially cross down underneath 44. So that means this: if the Bitcoin bulls today, over the next 13 hours, fail to close back above 44 grand in US dollars, that means the stochastics will turn red and start to piss the bed. Okay? The stochastics will turn red and start to piss the bed. Try to remember these postulates because they won't deviate, okay? Today, this is ironclad. It's the 7th of December. It's approximately 10:45. It's GMT. And this is the gospel right now, Men lie, women lie, numbers do not. Men lie, women lie, numbers are real. And again, if Bitcoin fails to cross back above 44 large today in the next 13 hours, the stochastics will officially turn red in the critical zone for the first time since November the 3rd. And that's a fact. That's not an opinion of mine. Cool, leave it there. Right now we're 43.2, so that means we've got to go up $800 to remain bullish. I doubt that today. In the next 13 hours, I doubt we'll push up another $800 per BTC. If we do, I'll eat my words, and the stochastics will continue rising within the critical territory. Okay? Simple as that. Now, that's what I'd be looking for. Another thing worth mentioning is the volatility expansion that we see on the BBWP. So this multicolored line that you see is the Bollinger Band width percentile, better known as BBWP, aka Bollinger Band width percentile. This is the metric in which we govern volatility. When people say, oh, the market's volatile, yeah, we know about that because it expands and contracts according to the Bollinger Band width percentile. As you see on your chart right here within our trend volume inertia indicator, it does it automatically, right? So it will expand and it will contract in accordance to the ever evolving market liquidity. You don't need to know diddly squat about what I've said. All you need to know is that it works. Simple. And again, anytime it's at 100 percentile, typically it's at a full expansion, right? I mean, it is a full expansion. It can't go higher than 100% volatility. Thus, it would have to come back down on a contraction, right? And that's exactly what we're starting to see. One second. That's exactly what we're starting to see, guys and dolls. We're nearing 100 percentile. We've got RSI falling, stochastics that will close down tonight underneath 44 large. So the recipe is right there. It's on a meal, right? You've pierced the lid, you put it in the microwave, you've took it out, you stirred it, you put it back in for another 2 minutes. It is brewing, dude. This is what's happening. Don't know if that analogy resonated, but there you go. Cool. So let's move on to the next one. Next one would be the 4-hour time fractal, and we do want to discuss the inertia on that and all. And this is a little bit more advanced than the daily, right? So this tells you what's to come on the daily. We can already see volatility contracting from a full expansion phase. We can also see RSI is falling in tandem with the MACD, which is the moving average convergence divergence. And also the stochastics have turned red already, and that was yesterday, okay? So the stochastics on the 4-hour turned red yesterday. On the daily, they'll be turning red in the next 13 hours on expiry. That's exactly what we look at. Okay, multiple time fractal analysis, and we see the similarities to form our thesis, right? And that's exactly what we're seeing here. We're seeing a falling market in momentum. That's the simple one take bang. We see contracting momentum with contracting volatility. That is a recipe for a high probable chance of falling, keeping it simp. Cool. So yeah, that's really what we're looking at. Now, just to spit out some nuances here, the RSI on the 4-hour will be falling underneath $43,900. The MACD will be falling underneath $44.4 thousand, and the stochastics will continue falling underneath $43,900. So you could take the numerator and the denominator, meaning the largest and the smallest, and it's safe to say as long as we're underneath both those numbers, we are falling. Again, the largest number is 44.4, the smallest number is 39.9, and we are firmly underneath all of those inflections. So momentum is categorically falling, okay? That's the observation analysis. It's very important that we park our opinions at the door and we make clear observations when we're doing our technical analysis. Cool. So next, what I want to discuss is gold. We'll take our attention away from Bitcoin. We've kind of fleshed that cat enough. Let's look at gold really quickly. We're 12 minutes into this and we're sort of like halfway through. So I'm going to kind of speed it up a little bit. Looking at gold then, let's pull up on the daily. Okay, so this is what you can see here, right? Now, this is what we've been looking at on Bitcoin. Gold got into the critical zone and then got violently rejected, got violently kicked out the critical zone. This is what we expect to happen in BTC land. It's already happened in gold land already. So if we reference the price action over the top of that, you would find out that gold hit an all-time high this Monday. Okay, if it's your first time listening to the pod or finding out what's going on in gold land, gold hit an all-time high ever in recorded human history on the 4th of December, Monday 2023. Now, it's not as bullish as it sounds because the high before Monday was literally back in May 2023, as denoted by this white horizontal line that you see on my chart. Now, the big idea is this. Yes, price action did breach it. However, it was only a wick, right? So they called it a long shadow. So it was a subsequent fake out, not a breakout. We call it a fake out because a candle body closure was not governed above the white horizontal. So in theory, we drawed it for liquidity. We pumped up, and then the bears said, "Ain't happening," and they basically banged their head. Imagine you're at the circus and you've got those things that pop up and you've got to hit them with a hammer. Basically, gold price action popped up and the bears hit it with a hammer. Big time. So that's what's happened. So we got hammered back down. The body failed to close above the May high, and that's all she wrote. Wicks do the damage, bodies tell the story, right? Wicks do the effing up, bodies tell you the narrative. And the narrative is bearish, okay? Now, an extension to this would be this. If we look at the trend volume entropy, get me words out here, I'm starting to mutter and stutter, I need my coffee. I've had no brekkie today, no water, no brekkie, no supplements. So yeah, I'm a little bit stiff in the old mental, but we're going to get it out. Now, this is the entropy line. As you can see, it turns from green when we're above it, red when we're underneath it. Right now, it's red on gold. Okay, that's the simple truth of the matter. If we get a candlestick above the entropy line, that would then turn green automatically. That's how I've coded it. And at the end of the day, we're red. So that lines up with momentum, it lines up with volatility, and it lines up with price action. Do I go against that? No, not really. We're not here to be the bloke that went against the tide and died. A rising tide rises all ships, and equally the other way, right? If it falls, everything falls. And you should be very aware of that, because when the tide goes out, often we see who is swimming naked. You don't want to be that bloke or woman who's swimming naked, proverbially speaking. You want to go with the flow to get the dough, you know? And we measure that to razor precision with the quantitative measurement on momentum. Cool, that's like the liquidity for us, right? When we synthesize the logic in terms of open market liquidity, I think it's an ocean, and I think we can govern the waves by momentum, and we govern momentum by computing power through the trend volume inertia indicator. It sounds fancy dancy, but it's 100% real talk, no cap. Cool, leave it there. Is there anything else on gold that I want to mention? Not really, no. So, I mean, look, I'll be bullish on gold if we go back above the May high. I think that's very respectable to say. But first and foremost, you want to see the entropy line turn green. So, you know, there's multiple factors to tell you to call off gold for now. And there's multiple confirmations before we get really bullish on gold again, keeping it simple. Okay, we want to see price action above this white horizontal before we get giddy for a sweep of the Monday high, if we ever get that high again, period. Cool, let's move on then. We're 16 minutes into this. Let's pull up the dollar and then we'll round off with the base case theory. I'll summarize everything, all the lingo. So cool, looking at the dollar, what do we see here? Now, the entropy line's green on the dollar. Now, this is something we haven't seen since July on the dollar. And as you know, what happened from July was this. Dollar went from $1.01 all the way to $1.07. And that transpired from July to October. So in essence, from July to October, dollar was in a massive bull market. The dollar went up biblically. And as a lot of you know, there's an inverse correlation between the dollar and Bitcoin and gold. Meaning if the dollar's going down, typically gold and Bitcoin go up. However, if dollar's going up, Bitcoin and gold will be going down. Simple idea here is this: if the dollar's weaker, you need more of it to purchase the same goods and services. If the dollar's stronger, you need less of it to purchase the same goods and services. It's super cool. It's a rule of thumb, and it's that simple. People say, oh, trading's complicated, I don't have the time to learn. I mean, dude, just learn that. That's all you need to learn. If the dollar's going up, everything goes down. If the dollar's going down, everything goes up. It's called an inverse correlation, and it's prevalent in risk-on markets that are denominated by supply and demand dynamics. Period. Cool. Anything else worth mentioning? No. So again, dollar's bullish. We're also above the 200-day look-back period on the dollar. And I like that a lot. You know, as long as we're above the 200-day moving average, I suspect the dollar will be pushing onwards and upwards. Now, if we're looking at inertia on this as well, what we can see is that the stochastics are rising aggressively. We can see that the RSI has now officially come out of the bearish critical control zone, and volatility is expanding on the move. So yes, dollar has plenty in the tank to go up. That's my assumption. So cool, base case is this: bullish dollar, bearish Bitcoin, bearish gold. I repeat again, bullish dollar, bearish Bitcoin, bearish gold. Meaning I think gold and Bitcoin will go down and the dollar should gain in strength and go up. And it's as simple as that. So I hope that served you well. That's been 18 minutes of bang, bang, bang. Hopefully you've got some sort of essence out of it. If not, reach out to me. I will help you. I will hold your hand. I believe in each one, teach one. Socrates once said, one thing I do know is I do not know everything. So by all means, if there's something I've missed, let me know. If you've got any burning questions, equally, just let me know. I'm a human being like you. So I'm here to learn and we're here to earn. And I believe together we can go further than alone. So I'm going to leave it there. God bless you. And I'll be back on tomorrow with another View Bitcoin podcast.